All right, everybody, we're going to go over the trade opportunities today. The most apparent one to me was the gold long earlier on in the day. So what you see here is, from this low, demand came in, and it's right here. I mean, it's very obvious, biggest in at least 49 up waves. Biggest volume in at least 49 up waves. So what happened is they took out the low, took out these lows. There are obviously stops here. So they took out these lows, and there's heavy buying activity after that. How do you know? How do you know that from this low there's heavy buying activity and it's not just a regular pullback? Answer is it's the biggest in 49 up waves in terms of volume. Biggest volume in 49 up waves, 2.2 times average up volume. Does that talk like a pullback? Does that seem like a pullback? Obviously not. And the other thing was in the tape reading chart, this up move is this column. This column has the biggest up volume in 99 green bars. 99 green bars, at least 99 green bars. That is going to break any downtrend. So this is all buying from those lows. So with these two evidences of make the conclusion that this is a sign of strength or demand or change of behavior or change of character or whatever, this is buying activity, and that's what happens. It gets pulled back, tests, and goes up. So this here was critical. Even if it was 30, it would be too much. It's not a pullback for sure, because this down move, see this down move, is these red bars, and they're one and nothing, one and nothing, and the response is 99. So it's not a pullback. This is a weak shakeout followed by a strong buying activity. And it basically took the market right up to the high. That's what I expected. What's the high? The high is up here. What happens? Price goes to the high. So that is very important. You want to be really careful and not just assume that anytime you see a down move, that's where the market's going, because, for example, in this situation, you have a very strong down move, and it will make you think that, oh, the trend is going down because it took out these multiple lows. You've got to see the response, and the response is heavy buying activity. So that means the down move was a shakeout. That's what it means. That's what it means. Even if the trend is down, this is where it came from. For that time period, it's going to go up. And here's where in counter supply, where I have SPLY. How do I know? Because when it went there, this is what happened. It's the biggest down wave in a 13 down waves, 2.7 times average down volume. All right? So that was enough to initiate this leg. Now there is this 1 bar wonder right here. This 1 bar wonder, right? Which went and gave a test that very, but that you just have to kind of expect it. It could be because of the session or whatever. That's just something that happens, and not to be afraid of it, because it basically went into these yellow lines, which was the zone, the supply zone. So, it's going to get sold. So this was the turn again. The first turn is right here from 32.83 that I just showed, right? 32.83, bang, right there, with heavy volume activity. The second turn went up Counting demand eventually counter supply, and that was right here. So I'm very cautious because anytime the volume ratio goes over 2, it's not normal. You have double volume breaking 2.7 times average down volume, and then biggest in 13 down waves. Does that look normal? And then just look at the break. That bar had the biggest break in 60 red bars. 60 red bars. That's legit breakdown. It's a legit breakdown because it's on heavy volume and it has follow through. So that's a wrap. Now I am interested in what happened here. Is not very clear on the tape reading chart, because on the tape reading chart you see this is very clear that the move up, biggest in 99, very clear, obvious that it's going to go up, right? Because this is the selling shakeout being bought 99, at least 99 bars, volume's bigger than 99 green bars, and it goes up. Here you can't really tell. You can't really tell, and that's because it's like overnight. Volume can't tell anything. So just have to rely on the waves. The waves can show it here, 2.7, and that's why you need to take a look at both price and volume, the distance as well as the volume. All right. So for example, this is the biggest volume in 12 down waves, but the biggest in terms of distance in 13 down waves. All right. And also the ratios here, it's 2.7 times average down volume and 2.9 times average distance, meaning it's a big wave. And then the quality of the wave. The quality of the wave, just go over here. The quality of the wave is assessed in the bars, their volume, the range, and it's very clear that this is a breakdown, legit breakdown, and it has follow through. So with big bars, big volume, and you can zoom in on this. Sometimes I like to zoom in just to make sure that I'm seeing what I'm supposed to see, and what I see here is very clear. Here, from this high, this was a minor buying climax, where you see that it's the biggest volume in 21 bars. What happened after that? It got sold. That's how you know that this is a buying climax, and it's demand meeting supply, for sure. Why? Biggest in 21 bars. Demand is meeting supply, and supply is overpowering demand, and here it is the biggest in 60 bars, red bars, breaking this low. So demand met supply, supply overpowered it, and supply broke support, changing the direction from up to down. That's actually the bar that broke the uptrends back, right here. Is the backbreaker. And that term I actually got from a description in Wyckoff, where he talks about the bar that broke the back of the trend. So I just call it the backbreaker bar. It's the uptrend bar. And this is what's known as minor climaxes, where you have waves that are terminated by climaxes. This is the climax, the 21. The biggest volume in 21 bars terminates the up wave because demand meets supply and supply overpowers it, as evidenced by the red bar after it, and then finally breaks the trend right here. So this is the quality of the wave. So maybe I'll give one more example. look at, we'll take a look at this. See the quality of that. All right, here you go. As the bar, so we're looking, examining this wave down and trying to get the quality of the wave. As the wave goes down, what do you notice here? 99. Isn't this a climax? Yes, it is a climax. Why? Because it's terminating something. Typically, climaxes terminate trends, but they can also, the buying and selling climaxes, they terminate trends, but they're minor climaxes that terminate waves. That right there, I don't know which one this is, but it's a climax. It's like bang right there, 99, done, finished, goodbye, done. There's no way this, even up here, they terminated the 65 and no follow through. Anyway, so now you have all that buying activity, and then the market pulls back. All right, now we're going to observe the pullbacks. And just ask yourself, what am I looking for on the pullback? Obviously, you're looking for a climax, right? Why? Because I just explained that trends and waves are terminated by climaxes. So, as it pulls back, this one has the most volume in 4 bars. This one has the most volume in 5 bars. This one has the most volume in 0, 0, 1 bar. This one has the most volume in 2 bars. This one has the most volume in 4 bars. This one has the most volume in 28. All right, 28. That's the most amount of volume in the entire swing. Now, what happens as a result? Green bar. What is that telling you? That's telling you that this volume means that supply is encountering demand. This volume is supply encountering demand at this area in the zone. Right? Because if it was really strong supply pressure, it would not have a green bar after it. It would continue down, breaking this low. So this is your minor climax, and that's it. I mean, it's time to get in. See the way it's spiking? And this is, by the way, this is real Wyckoff. If you want to learn more about this, just take a look at the first study on the New York Times. There's multiple minor climaxes. In fact, the study actually starts off with a climax, a selling climax that terminates the downtrend, and then there's a rally and multiple swings where you have minor climaxes. So the same thing occurs. Now, you want to use some type of indicator that allows you to kind of read that, because one of the major issues is if you just have a histogram, a lot of times you can't really make sense of the intraday bar volume at all, because it all looks flat. It all looks straight. So there are ways of comparing volume, red volume to red volume, green volume to green volume, red, or just comparing it. But in this case, it's just obvious. This one terminated the upswing. Sticks out like a sore thumb. This one terminated the downswing. This one terminated the downswing. This one terminated the upswing. Up, terminated, down, terminated, up, down, terminated. So this is also known as ending action. All right, that's all, folks. Take care. Bye.